What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at Get Capital 3. The merger's coming to a close, and so I want to give you my thoughts, where I see it going, kind of give you an update. I'll also kind of give you my thoughts on the overall market inside of SPACs, high multiple, innovative tech stocks, and the EV market, and then we'll wrap it up. So let's not waste any time. Let's jump right in. Alright guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day, with growth stocks or penny stocks or market news. I haven't posted the last few days, I apologize, it's been absolutely crazy at the office, but I do try to post every day. We're almost to 1,000 subscribers, so hit that bell for me, hit the subscribe, be a part of the family. I'm so excited to break 1,000, you have no idea. But there's a link down in the description to my Patreon account as well. Come over there and join us. If you want to be in the day one squad, I think we've got about 10 spots left. I'm doing it for just $1. You'll get access to the private Discord where we talk stocks. You'll get links to 4 different portfolios, so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along. Anytime I enter a swing or a crypto, I send that out as well. I do want to say though, guys, I'm not a day trader for say. I do trade crypto pretty actively, but when it comes to stocks, I'm more of an investor. I do take swing trades from time to time, but I just want to be transparent. It's not like I'm sending out swing trade notifications every day or day trade, entries. And I'm more of an investor. I look for good companies. I do, a lot of fundamental analysis. I spend hours researching and looking through the 10Ks to try to find good stocks that we can invest in for the long term. I just want to, be transparent with that, so you're not coming over, expecting like a full-fledged swing trading channel. Just so you understand what you're getting as far as value goes. But if you want to be part of the family, if you want to help us grow the channel and be in the day one squad, come join us. We'd love to have you. But guys, let's jump in. Let's not waste time. So I wanted to kind of give you my thoughts on the overall market. Guys, the market moves in cycles, right? We're in a downtrend. The days of EV stocks, that's what I mainly want to talk about, is high multiple SPACs and EV stocks, innovative tech. The days of these EV stocks appreciating in value, the stock price going up super quickly just for simply existing, is kind of a thing of the past, in my opinion. I do think that the whole industry will turn around. Right? It's not like the EV stocks and the high multiple and the innovative tech and the SPACs are going to be down forever. I know it feels like that. Trust me, I know it feels like that, but it will turn around. Now, I don't think it's going to turn around in the sense of all of a sudden one day it's like, whoop, here's our uptrend again, and it's just going to explode to the top side like it was doing back in January and December and November and February. I do think it's going to be more of a, okay, everybody's over it, the market starts advancing, it'll be a slower, steady run back up to the upside. I don't think you'll see those just straight walls like you were seeing back in January. I do also think that things like partnerships and operational developments and little catalysts are going to take more of a back seat to hard fundamentals and hard revenue, especially now that investors are pricing in, the brutal competition of the EV market. And it's almost like a Darwinistic market type feel for a lot of these high multiple and EV stocks. The charging, the electrification, the EV, it's going to be extremely competitive, And so there is a gap between revenue guidance and actual revenue when it comes to a lot of these SPACs. And I think that the difference between that will be one of the main driving factors in stock prices moving forward. What I mean by that is I believe that in the future, moving forward, the SPACs that came out with more conservative, realistic revenue guidance and projections are going to reap the benefits. And the SPACs that came out with extremely aggressive, unlikely revenue guidance and projections will feel the wrath of the market. They will get hit because of that. And so I do believe that as we move forward, Because if you think about it, the SPAC craze set off this chain of events where any hedge fund could set up a special purpose acquisition company. They could go out there and target a company. The company could have poo-poo fundamentals, and they could have extremely insane revenue guidance, and the stock would go up. I don't think that's going to happen anymore. I do think, again, like I said, there's going to be that divergence between guidance and actuality in revenue will be one of the big determining factors of stock price. And the reason why I'm bringing that up is because Get Capital 3 Lightning eMotors has been getting hammered. In my last video, I said that I thought it would go below 10, but I said that I thought it would go post-merger. I didn't think it would go there the next day. Now, looking at the price point it's at down in the 7s, if we look back into other SPACs that are similar, Romeo Power comes to mind, Canoe comes to mind. They saw some extremely sharp sell-offs post-merger once they were forced to pull their original SPAC revenue guidance. Get Capital 3 has some extremely aggressive revenue projections. Now, I don't think that's necessarily a bad thing, but I do think that if they come out with divergence in that guidance, they're going to feel the pain. They're going to get hammered. If we take a look at their overall, let's go ahead and take a look at their investor presentation. So as of right now, there will be about 82.3 million shares outstanding post-merger for Lightning eMotors Get Capital 3. So that puts their current market cap around $643.5 million at the $7.82 share price. If you look at their forward price to sales ratio, they're trading about 10x of forward 2021 earnings, or revenue, excuse me. So 10x that. If you look out to 2022, and you look at the full 354 million that they're projecting to do in 2022, that puts them at about 1.8 times price to sales, which is really low. Even if they underperformed by 50% and they only did 177 million, they would still only be trading at 3.6 times their price to sales. And so that's when you start looking at a lot of these SPACs and these high multiple stocks, that seems really low and really conservative. The one reason why I wanted to point all this out, guys, is because, like I said, if what's going to be crucial for Lightning eMotors is them coming out with proper revenue guidance, hitting their numbers, or coming very, very close. If they come out and they flop and miss revenue, they are going to get hammered, because this 195% compounded annual growth rate is a big, big number. That's going to be really challenging to do. But the one thing that I really like about these guys is, look at this. Already received purchase orders to fulfill 100% of 2020 and 2021 revenue. So they've already got purchase orders to do the full 63 million in 2021, which is fantastic. So if they do that, and if they come out at the 63 million or slightly above, I think the stock will get a boost from that. Now, the 354 from 2022, that's a giant jump there. Do I think they can do it? Yes, because I did see another section of this investor presentation, let's see if we can find it, that said that they've got a path to 1 billion in revenue based off of previous customers. Let me see if I can find it here. Let's see here. So path to 1 billion in revenue from current customers by 2025 out of 2 billion total projected revenue. 100% of revenue of 2021 forecast contracted of Q3 2020. So they're already forecasted. They've got $800 million in the pipe right now. Okay, that's a lot of money. Now, pipe deals and things in the pipe, that's exactly what they are. They're in the pipe. That means they can fall through, things can happen. Projected revenue is just that, projected revenue. Now, if they do have the 800 million in the pipe like they said they did, and they can hit that 354 million by 2022, I would really see the stock trading upwards around $43, putting them right around a 9 to 10 price to sales ratio. I do see further downward pressure. I do see the stock going further down. If we look at the chart here, I mean, you can, how do you map this out? I mean, there's no really telling where the floor is, you know, because there is no support, there is no resistance, there is nothing. When you look down, you know, you could drop down, clear down to like an hour chart, and you can kind of see, okay, where has it been holding? But look at that, it's just straight down. You know, you think it's going to hold there, boom. Think it's going to hold there, boom. Think it's going to hold there, boom. So, you know, there's no telling where it's going to go. I do think that, you know, the $7 mark, the $6 mark, it's going to float there for a little while because the merger's finishing up tomorrow. I mean, you can no longer redeem your shares for the $10 mark. That was today or yesterday, that was it. Which is fine. I'm holding, my cost basis is like 11 bucks. So I'm way down on this stock. But I do have faith in this stock because I like the fact that they've got the 800 million in their pipe, the deals that they've got from DHL. You know, they've got a lot more, you know, I don't want to say projected. They've got more, you know, stuff in the works. They've got more pipe. They've got more revenue out there than a lot of these other guys like XL Fleet. They've got vehicles on the road. So I don't think that their divergence between guidance and revenue actuality is going to be that far off. I can see these guys being pretty close, pretty in line, and their stock getting a bump from that and increasing in value because of that. Now, if you do not have a position in this stock right now, I recommend you stay on the sidelines and wait. You have two options. You can either take a half position today and say, okay, I'm gonna get in at 775, and hopefully when the merger gets over, it doesn't fall down to 4. Do I think it's gonna fall to 4? No. Do I think it's going to go down to 6? I could potentially see this stock getting down to, you know, mid to high 5s to low 6s, finding a floor and then, you know, trading sideways and consolidating until we get some type of revenue numbers, some type of, you know, guidance on what's going to happen in the future. So I do think the market's going to turn around. I do think that we've got some things, you know, giving signs and signals that the downward trend is weakening a little bit. So guys, with that being said, I just wanted to jump on here and tell you, look, if you don't have a position right now, I would recommend holding off because I don't see it just going boop and popping. You're not going to miss anything. When the merger's finished, the ticker symbol changes, you're going to get dilution, like the stock's going to see downward pressure, and I could see it falling further. So I would rather see you wait a week or two after the mergers finishes up and, you know, all of that kind of advances and you know, they're past the whole merger thing before you take a position. Now, if you decide, okay, I don't want to wait, I just want to get in just in case, take a half position, you know, at 773 and then watch and see what happens. Be patient because it may fall way down here to $6 or $5.50 and then you can cost average down again. Guys, I think that over the course of the next 2 years, we're all going to look back at this point in time and say, wow, that was intense, and I'm real glad that I stayed where I was because Skills, PaySafe, GIC, Star Peak Energy, RSI, you know, they're all down at levels 12, 13, IPOE, SoFi. All of those stocks are going to recover, and the recovery is going to be glorious. You know, I really do see these stocks doing very well over the course of the next 2 years. You know, when you look at PaySafe, when you look at SoFi, they've got good revenue. You know, PaySafe is, in my opinion, the most solid bet because they're already doing very well. With SoFi and the bank charter, I see them doing well, but this is not what that video is about, guys. I just wanted to jump on, kind of give you my overall thoughts, you know, let you see my face again because I haven't posted a video in the last couple of days, and let you know kind of where I see this going. Again, guys, be patient. You're not going to miss anything. Just, you know, watch it. See what's going to happen. This is some big selling pressure right here. Those are big igniting bars and they're moving quick. That's like, you know, 3 black crows. You know, maybe we'll see some reversal candle right here and we'll start seeing it move back up, but I do see it trading in a range for the next few weeks. So don't, you know, think you're going to miss anything. That's it for today, guys. Let me know down in the comments what you think. You know, I would love to hear some of your opinions on it. I would love to hear some of your opinions on the overall market. This video is for entertainment purposes only. I am not a licensed stockbroker always do your own research and due diligence. Don't just take my word for it. But come join us at the Patreon if you want to be part of that day one squad. We've got some more spots left. And like the video if you get any value out of it. And I'll see you guys in the next one. Peace.